Hey, it's Anthony Meisner with your Big Greater Metro Denver update. Let's dive right into this. And I want to break this into detached and attached this month so we can really see the difference because things are definitely trending in different directions and they're changing pretty drastically if you look at one versus the other. Now, look at this. We have inventory reduction, active units down about 10% from this time last year. Pendings are up about 10% from this time last year. Those are all great things. But with the elevated inventory levels, we've seen a stagnation in the average sales price. So take a look at that. It's minus 0.46%, and we're basically right in line with where we were last year. If you look at the attached market is doing something very different. Still has rising inventory, up 3.3%. Pendings are real slow and sluggish, just like they were last year, which has caused the average sales price to drop by 3.3%. So this market is much tougher, and this is really feeling that slip like we have seen across a lot of the state in the attached market. Now, active units of inventory really tell the story. So where are we seeing the change, right? We're down 10% year over year, but places like Arapahoe County are down 20%, where Broomfield is up slightly from this time last year. Jefferson and Elbert County are down single digits, and Denver County is down 14% in active units of inventory. So there is definitely this resurgence of people coming back into the detached market. Also, sellers seem less excited about selling, right? And you get into the attached market, and we have much more inventory across almost all of the market. Broomfield up 15%, Douglas County up 20%. You have Jefferson County up about 6%, Adams County up 7.5%, which leaves Denver as the only county who's actually flat in its inventory. So interesting to see. But that's what's really leading to those prices coming down just a little bit. If we look at new listings, this is really the listings that came out last month. You can see that it really took all the way until March for us to get into seller season, right? We saw buyers come to market a little earlier. We see those huge valleys where people don't list anything in December, it seems like, although it is still over 1,000 units. But the interesting part is with those new listings, there's less sellers coming to market this year than they did last year. So even though we're entering our spring selling season, you just don't see quite as many people participating. The only place that's really booming is Broomfield with 33% in new listings year over year. So more listings taking place there. But most of the rest of those are single digits in the minus column, except for Elbert County, down 23%. The attached market, though, this is where you're really seeing a very, very big change. You've seen more inventory come on the market. Yes, the new listings are very similar to last year, but look at where they're taking place. Broomfield has almost 30% more new listings. Douglas County, 22% more new listings. So there are a lot in certain pockets that are taking place. Arapahoe County is actually short in inventory, minus 8% in the attached market. Jefferson County only up 4%. Now, if we look at the month supply of inventory, this really gives you that feel of whether we're in balance or not, right? Detached single family homes are getting up to about 2.5 months of inventory, a little less in balance than maybe we saw earlier in the year, because you're starting to see some of that inventory pile up, right? We're not putting as many under contract as we have sellers for right now. So more sellers than buyers means inventory is going to rise, which means buyers are going to get a better deal. Now, are we approaching balance yet? Probably not quite, but we'll be there eventually, and probably not for, maybe only in the next couple of months as you start to see that take place. But the markets that are really outperforming the rest, Arapahoe County is still super tight sellers market, 2.1 months of inventory. Jefferson County, same thing. Elbert County and Douglas County having the most inventory on the market of just over three months. The attached market, this is the flip side of the coin. 5.5 months of inventory, so much more than we saw last year. And it's really taking place in Denver. 7 months of inventory in Denver, everywhere else, sub 5. Excuse me. Days in MLS, you can see here that we are sitting around 35. The market's actually faster than it was, substantially that change takes place, right? We really enter that spring buying season and buyers and sellers are trading houses much quicker. 35 days isn't bad. 1 month to go under contract, very similar to this time last year, only 2 days off. But there are certain pockets that are taking longer to sell, and you can see that in Elbert County, it's 77. Douglas County is 40. Adams County is 46 days. So a little bit longer there. The attached market, surprisingly, with 5.5 months of inventory, you'd think this would be a lot higher. But it's clear that if it's priced right and the condition's great and it's in a good location, people are still interested in some of the attached product. It's just if it's a slew of inventory and the product isn't a great quality that we're starting to see it sit and sit and sit. So 52 days in MLS to go under contract isn't so bad. And some of these markets are actually quite a bit quicker. Even Broomfield, with that huge increase in inventory, is still in 43 days. So not so bad. Just keep your eyes on it. Denver is still, with all that extra inventory, 60 days in MLS to go under contract. But with 7 months of inventory, there's clearly a lot just sitting. If we look at it by price range, we've seen a transition this year in some of the markets. So over 3 million, we're up 30% year over year in sales, in solds. So that's a really good metric to see. It's exciting to watch that. But the 2 to 3 million market is down 11%. And the $1 to $2 million market is down about 5%. The place where we're seeing the most activity increase would be that 8 to 900,000 at 5% up, or the 400 to 500,000 where some of those first-time home buyers are getting into the market, up 8% as well. So those are exciting to see that. Some of the others are just marginally slipping. We're very similar if you look at the whole pie as to where the same size as last year, but it's definitely taking place in different parts of the market. Now, the other issue we're running into is the attached market, a little bit less taking place in the sales. Now, we are seeing more luxury sales. We saw a 16.7% increase, 21 units sold last month between 1 and 2 million. That's a great sign. It does mean that there's more luxury taking place. The 600 to a million range, where you might see a lot of those really higher end townhouses or condos, they are really struggling. And I think it's largely due to cost of money still being fairly high. And we are seeing a little bit more take place than last year, from 4 to about 600,000. So that's good to see, just a little bit of that taking place, but we have so much more inventory that this is very difficult if you're a seller in that marketplace. The one spot that I've been paying a lot of attention to is the detached single family home market, and where it still, feels super competitive. Now, if you're a seller, you could probably still have a great time in this marketplace if you're under 600,000, right? We still have less than 2 months of inventory. Houses are moving super quick. Really, from 600 to a million, it's still around that balanced market, even just a little bit sort of seller favored in some ways. But clearly, if the price isn't right, it's not selling. But we don't have a ton of inventory piling up yet. Now, this is rising every single month right now as we have so many more sellers than buyers coming into the market. And the days on market will continue to speed up for the next couple of months to the peak of the market. Now, if we talk about attached market, this is where we really want to show where is all that inventory at, right? And the luxury market has a ton of inventory attached. And it's very similar to what you would see traditionally inside of the detached luxury market, but we just don't have as much detached luxury on the market compared to maybe some of our expectations we would normally see. But here we are looking at 7 months of inventory between 1 million and 2 million. Just very similar to what we saw in the city of Denver. But we are seeing more of them take place and get sold. So that's good to see. They are selling faster too, because if they're really good product, it seems like they're selling quick. 33 days in MLS last month. The bulk of the market, though, under a million, pretty much all the same. They're all trending in that 45 to 50 days in the MLS range, and 5 months of inventory is just a lot of inventory. So prices will continue to slip as long as we have this huge excess in inventory for our buyers. Now, if you want to talk about price, let's look at this real quick. We have average sales price of detached single family. You can see we've been bouncing around every year very seasonally, but we also have seen, not quite hitting that peak back in 2022. So that being said, we're still a little bit less than we were this time last year, about $3,600 less than the home value where we were a year ago. And if you look at the attached market, we've seen this slow erosion in value ever since we saw those huge peaks take place in 22. Now, we saw a big bump in 21 as well. And then we're kind of eroding back to those values, right? Because we just had too much appreciation too fast. And with all of the HOA issues and all the other stuff we've seen with insurance in the marketplace, this is just not a affordable product comparatively, right? And the other part is when we build all of these, higher end apartment buildings that we've been building, it does put stress on this market as well. And we had so many units come online that people have asked themselves, if I can stay in my brand new apartment for, the same or probably less than what it costs to buy, why would I make that change? And I think we're really starting to see that take place in the prices here. Now, Is this going to erode much longer? It's really hard to tell. Until buyers make a change, it's going to continue to happen what's happening, right? Or they'll come back into an affordable range and people will start buying them again. So definitely keep your eye on the attached sales price, but it is clearly eroding and very differently than what the detached market's doing. You look at it by sold units, people love detached homes, right? It's the gold standard in real estate, especially here in Colorado. And you can see that we're doing right alongside what we did last year. Very similar numbers every single month. You can see year to date, we're basically exactly in line with where we were, even with the Iran war and everything, right? Because remember, last year we ran into tariffs about this time of year and we had the same thing. So as interest rates have been a little volatile, it seems like buyers have just kind of hung in there. Now, if we look at the attached market, you can see we just haven't quite hit our numbers for the year, right? We're way below where we were by about 8% year to date. So we're just not selling as many, and that's going to continue to put that hard pressure on that marketplace. Last slide I've got for you, percentage list price to sale price. You can see this. This doesn't include concessions and it doesn't include price drops. So it doesn't tell us a ton, but you can see seasonally we're very similar to where we were a year ago. So hopefully that helps when you're out there, making offers and wheeling and dealing with your clients. If you have any other questions, concerns, need other data or information, please reach out to me. Always happy to help. Otherwise, don't forget to like and subscribe to the YouTube channel to see more content. See you next time.